Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex and gold and S&P fundamental and technical analysis for the week ahead starting the 9th of December. And I hope you all had a great trading week. My apologies for not having a video out last week. I had a bit of a family emergency. Um, but now back to regular scheduled weekend videos. So, getting into the week ahead, and in the United States, attention will be on inflation indicators, consumer price index, producer price index, and export and import prices. Also, central banks in the euro area, Australia, Canada, and Switzerland will outline their monetary policy decisions. That's going to be quite important. In China, updates on consumer and producer inflation, trade data, and yuan loans are awaited. Germany will report on its balance of trade and wholesale prices. In the United Kingdom, focus is on October's GDP growth and industrial production. In Australia, investors will pay attention to Labour report and NAB business confidence. Finally, Japan will release the Tankan manufacturing index. So lots going on, especially when it comes to the central bank announcements as well. And so, yeah, starting off as we typically do on the US dollar, and this is the equally weighted US dollar index. And the dollar, I believe, is still a buy over the medium term. In the short term, and as we get to really the end of the year, I think we've only maybe got about another week and a half of the trading year by maybe the 19th, 20th. Traders obviously go on their Christmas holidays, but I think the dollar, although data came out on Friday, which was a bit mixed. The headline says the mixed jobs picture adds weight to upcoming CPI report. Payrolls rose 227,000 in November, just beating estimates. But the jobless rate ticked up to 4.2%. Participation slipped. And so the mixed report boosts bets on a Fed interest rate cut this month. If we go to the Fed Watch tool, we'll see that pretty much 18th of December, there's an 86% probability the market is priced in an ease, right? And a 14% chance of no change. But it's really about also as well next year. So if you go to SOFR Watch, and you can see that next year the market is pricing in really, what's that, 25, 50, about 75 basis points worth of cuts. Now, of course, that does depend upon the inflation data, but the more that these rate cuts get priced out, is the stronger that the dollar will get. Because, of course, if the Federal Reserve, have no need to necessarily cut rates because inflation is rising, and you have a decent economy, then that should support the dollar and strengthen the dollar. Also, as well, Donald Trump's policies are seen as inflationary. So there's that in the background. Also, in the background is seasonality. So the average move in the euro dollar, and we'll get to the euro a bit later, moves over the last 24 years. And so you can see here in the last 5 weeks of the year, the euro actually has a positive bias, so the dollar has more of a negative move. This may be end of month flows, end of year rebalancing by the banks, but typically, and it's not necessarily going to be set in stone, but if you go on statistics, the last 5 weeks of the year is in terms of the euro dollar. The dollar doesn't necessarily have the best, doesn't necessarily, or it depreciates, right? But in week 2 to 9, you typically have a dollar strengthening. So I think there could be some dollar profit taking going on. And as I said, maybe some end of month, end of year balance flows coming in, where you may have. In fact, I'll use this tool here, where you may have the dollar kind of pull back a little bit into that demand zone. But ultimately, I do think that the dollar is more of a buy. So for now, I think the path of least resistance, we've been pretty much trending up since October. So we're due probably a deeper pullback anyway into the year. And that makes a bit more sense. In the short term, definitely a bit more tricky to say whether the dollar's going to go higher or lower, especially as, traders take the Christmas off. So, um, yeah, I think this in the short term, difficult to kind of say which way the dollar it may go, but I think overall any pullbacks should really be longer term buys. Looking at the dollar yen, and the dollar yen, has actually pulled back finally. We've had again a great run since October. Was it been over 1,000 pips? I would assume it's something like from the absolute low to the absolute high is around 1,500 pips, right? So with no real major pullbacks, and now we're getting that pullback into what would be known as probably fair value or closer towards it. My bias on the dollar yen, I would still rather go long on the dollar yen. I do think that the rate differentials are quite large. So basically the question is why would investors come out of the dollar if you're earning maybe somewhere like 4.5%, even after cuts, in comparison to the Japanese yen, where they might only hike rates to maybe about 0.75%, maybe 1%. So I do think that we probably may get some, a bit more of a pullback, but overall, I think the carry trade idea is still valid. So any pullbacks into, maybe a fresher area of demand or maybe down into the 148s, I think could be decent. The yen isn't necessarily a sell against all currencies, though. If we go to the, Bank of Japan's leading dove boosts yen by not ruling out December hike. So, they are looking at hiking potentially in December. Is by the rumor at the moment. Um, but I think the yen is more of a buy against something like the euro, and I'll get into that as well in terms of what hedge funds are looking at in terms of the euro yen. So the yen, in my opinion, is a buy, just not against all of the currencies, but on the dollar yen specifically, I do think that we probably might see a bit more upside potential on this. But if you don't want to trade it, obviously you don't necessarily have to. I'm telling you, this isn't trade recommendations, just my analysis. But if you are looking at shorting the dollar yen, right, then you're looking at that area there in terms of a sell, or the higher area, the 154s, if we can get up here. Um, and then look for a short trade. Dollar Swiss, my preference would definitely be more of a buy. This week we do have the Swiss franc, Swiss National Bank announcement, and there's a possibility that they could cut by 50 basis points, right? So a larger cut. And if that happens, I do think that, although again the Federal Reserve are looking to also cut rates, um, I think there were more cuts coming from the Swiss franc and bank intervention, than there is from the Fed. The SNB, Swiss National Bank, think that the Swiss franc is highly expensive, so they're going to be looking to devalue their currency in any way, which way they can. And one of the ways that they typically do it is by intervention. So if that's the case, if you got that in the background, then I do think that the Swiss franc, the dollar Swiss, should move to the upside. Whether it moves, here, or pulls back a bit more, um, who knows? But ultimately, just looking for really kind of buy trades in my book. So moving on to the dollar CAD, and the dollar CAD, the CAD had some not so great news this week when it came to, I think it was the unemployment rate. The unemployment ticked up, which basically increased the chance of a larger rate hike. In fact, I'll get the news article here, and it says Canadian dollar slumps with yields on bets for big Bank of Canada cut. So Canada's jobless rate surges to highest in 3 years, and the currency fell 1% against the US dollar, shy of weakest this year. And so, yeah, surging unemployment led traders to ramp up bets on a half point interest rate cut next week. So again, going back to really the charts, that's the reason why you're seeing basically the market price that in. So I do think any pullbacks into a demand zone, maybe the 140s, back down into the 140s, I think is going to be a nice area to look for a long trade. Looking at the pound dollar last week did kind of react off of this area, maybe a bit more of a stop hunt. I think the pound is now pulling back. I am actually more long on the pound. So reason being, fundamentally, you have Bank of America. Well, not really because of Bank of America, but Bank of America agree with my analysis, or I agree with theirs, on the fact that the pound is a buy in terms of they're not looking to cut rates this year, and also as well they're cutting one of the central banks that are probably going to be cutting the least amount in comparison. So Bank of America, Wall Street's biggest pound bull, sees another 8% gain. So BOA says euro pound, which I'm actually in this trade. I'll go over it at the end of the video. Could hit levels last seen since 2016. Strategists see the pound dollar rising to 138 by the end of 2025. So the pound, as long as, of course, the data supports the pound buying, then 138 is basically just above these highs, right? These highs are 135, so another 300 pips um above that area there. So if you are also bullish on the pound, I mean, I'm bullish on the pound, not necessarily against the dollar, but I am against the something like the euro. Um, but if you are looking for this trade here, then you're looking at really pullbacks into any of these demand zones before looking at going long. If you are looking at a short trade, then maybe a bit more of a pullback. I think that underneath of this 128, 129 round number, I think that's going to be a really nice technical area to start to look for some short trades. But personally, I'm not really interested in this pair to trade, but I am interested in both uh, currencies from an individual level to trade against um, other currencies. So pound yen and pound yen. So we did come down into the bottom area of this demand zone. Looks like we did do a bit of a daily stop hunt back into the demand zone, but ultimately, again, I'm not too interested in this pair. I would probably say that we can start to maybe move the demand zone down to here, and we do have that. Um, if you are looking for short trades in terms of buying the yen over the pound, then that makes sense to look for a short trade there. Of course, from a fundamental perspective, the Bank of Japan, they are the only really central bank at the majors that are hiking rates. So you could see a bit more downside, or maybe likely to see a bit more downside. But if I'm buying the yen, I think I'd rather do it against a weaker currency than the pound. Something like the euro or the Swiss franc would be my personal preference. But yeah, you can look for some sell trades pretty much right now if you wanted to, or maybe a bit more of a pullback up into the 193s, 194s before looking at going short. Euro dollar's pulled back this week, a bit surprising, but it just sets up for a nice sell. Reason why I say it's surprising is because, first of all, we had a bit of a deceptive calm in France after government was toppled. So there's political instability, which typically would add to euro bit of a decline in the euro because there are, you have an unstable government, uncertainty, a lot of doubt. that should have fed through to euro sells, but this week it didn't. Whether they were, there was some short squeezes going on, who knows? But ultimately, I do think that um, this is going to have an effect on the euro overall. It typically does, maybe not in the short term, but over the medium to long term, the longer this plays out, I would think that the euro should want to sell off a bit. Also, as well, just from a fundamental perspective, we have hedge funds pivot to selling euros against the yen on Japan rate bets, right? So the rates, there's rate differentials. So Nomura, JP Morgan seeing macro fund preference to sell euro for yen. France's government to hold no confidence vote on Wednesday. So this was before the no confidence vote. But it basically just goes into the reasons why you want to be a buyer of the yen over the euro. So hawkish comments from the Bank of Japan governor the way the last week has further helped bolster the yen's attractiveness. Meanwhile, weak regional economic data was already making the euro an attractive currency to sell for investors, right? Fears that Wednesday's no confidence vote in France may topple the currency's government, adding to reasons to sell the currency, and that actually obviously ended up happening. So really, there's no real reasons to buy, in my book, the euro, regardless what price does in the short term. It just sets up for actually a nicer sell to the downside. So I'm looking at now sells to the downside for the euro. Oh, by the way, sorry, this is the euro index, the equally weighted index. Many of you might have been looking at this and going, "What pair is this?" I actually said the euro dollar, right? It's not the euro dollar; it's the euro index. Apologies. I use this as confluence in exactly the same way as I use the dollar index, right? So it's the equally weighted dollar index. Sorry, not the euro dollar. And but going on the euro dollar, looking for pretty much, shorts from now. Again, going back to the seasonality, from a seasonality perspective, if the euro was to continue rising, unfortunately, then I do think that I think any, you know, moves back up into even the 107.50s would be again a decent sell. So ultimately, I do think that the euro dollar is a sell from now. This week is obviously going to be quite pivotal. There is US data coming out. There is obviously central bank, ECB. One of the major factors as well with euro weakness is going to be whether or how dovish the ECB are in their speech. So yeah, lots going on. But overall, from a just from a macro perspective, I do think that the euro dollar is more of a sell. So if you get a bigger pullback, if it basically falls from now, then brilliant. If it doesn't and it pulls back a bit more, then it's still a sell in my book. So euro yen again, pretty much same direction as we've just read. It's really about just the hedge funds are bearish on this currency pair. So it's really just one way traffic, right? Why go against that? Of course, things can change. Data can come out for the euro, which supports buying the euro, but ultimately, for me, for now, it looks like the um, the euro yen is an all-out sell. So really, any pullbacks into these areas here, you're looking at short trades. Really not much to say on that. Euro pound. So euro pound, I managed to get in up at this retest of the supply zone, still holding. And in that article, it was saying about the retest of potential lows. I think it was the Bank of America. Yeah, retest of 2016, right? BOA said it could hit 2016 lows. So when we go to 2016 lows, let's go out to the last maybe 5 years, the weekly chart, right? 2016 lows are all the way down here, right? Around here. 2016, so we could see 76s. So that's a good maybe about 800 pips, 700 pips from where we are currently. So ultimately, just gonna really hold this trade. You can look at the trade. I think I did do some analysis. The last video I did make. I did go over the entry on this and the entries on that, but I'll go over it again at the end of the video. So I'm just holding on to now one position. I took profit on two positions, holding on to one position. So I'm hoping that this continues to move to the downside. I've also trailed my stop as well. So let's see what happens with this trade to the downside. But if you are looking to get involved in this, and I think you really have to kind of wait for prices to maybe pull back up to this supply zone here before looking at going short. Or if we have, uh, price move to the downside, right, breaking this demand zone, creating a supply zone here, and then you look for a pullback down into that area there. That'd be the way to play it. Aussie dollar. So Aussie dollar. The Australian dollar, I think, is a buy, but it's not got the advantage against the US dollar because of the potential Trump tariffs, and the fact that Trump's tariffs may affect China, and that may affect the Australian dollar. So by proxy. So ultimately, if you are looking to take this trade, I'm not really interested in this pair, but if you are, um, maybe the path of this resistance is looking like obviously continued downside. Um, so you're looking at that area there as an area of supply, this area here as an area of supply as well. So I think any pullbacks up into these zones is decent for a sell if you do want to get involved in this pair. Personally, I think there are better trades out there in terms of divergences. So not really interested in the Aussie dollar, but you can look for either a buy now if you wanted to, or really a sell if you're looking for but to buy the US dollar over the Australian dollar. Gold. So gold has been pretty much in this auction, right? It's been in this from here to here. So gold has been accepted from the highs of 2668 to 2605s. So again, it really kind of depends. Gold, I think, fundamentally might be a little bit tricky at the moment because if you've got a long-term bias or medium-term bias on maybe the dollar, then you would expect, or you should expect, the gold to kind of sell off a bit, right? Because uh, gold works inversely to the dollar. Typically, right, and usually, but it's not 100% correlated. You do have moments where you can have gold and the dollar both increasing in value and also decreasing in value, right? But I think overall, I would expect, or I would probably be more of a buyer as an investor. So any pullbacks into a demand zone is decent, right? Any if you are looking to trade and short gold, right, then you're looking at this area here as an area to look for sells. Just remember that, um, I guess because the dollar pays interest, it may, I guess, kind of subdue the demand for buying gold because gold doesn't pay interest, right? So there's that, but also as well, you do have risk events that are coming on. You know what I mean? You've got a new, I think, Syria, war going on, a new conflict in that area, so that could also affect gold. So again, it's a bit of a tricky one at the moment with gold. But ultimately, if you are looking to trade, I wouldn't trade right here. I would look for extreme highs or extreme lows. The S&P. It still continues to make higher highs. Been saying this for a while. That my bias is always to the long side. Was hoping that prices would have pulled back to around this area here before looking at going long, but obviously it didn't. So really making new highs on the S&P. Really the next area to look for a buy trade, although I do still think it's quite on the expensive side, but a pullback into this demand zone in some way, shape, or form. So as long as the economy is looking good, the Fed are still cutting rates, so that's still cheap money. The I think the S&P is still looking like a buy on pullbacks, and even if you wanted to, sell, it's definitely hard to look for a reference to sell at all-time highs, right? Because there's nothing to the left of this to look to kind of sell off. So if you are looking for a sell trade, then you have to wait for prices to actually sell off a little bit, establish some sort of area where the market thinks the S&P is expensive before looking at, a retest of that level and then looking for short trades. So part of this resistance is still to the upside. So let's get into trade updates. And over the past couple of weeks, there was fairly a lot of trades, but in the interest of time and the time that I have today, I'm just going to do one win, one loss. So I spoke about the euro pound. So this was again a trade that I took. This was my entry, was up here on the 26th of November. Managed to get in on a couple positions as prices pulled back, and then ended up taking some profit. Taking profit on two of those positions as prices hit one-to-ones. And now really my ultimate goal, my ultimate target is really to kind of hold the trade. And so now I've also as well trailed my stop. So I've got maybe about a 12, 11 pip stop above, this swing here. So that's where my stop loss is, somewhere around the 0.8 32425 area, and that's where my stop loss is. So if I get stopped out of this trade, it will still be a profitable trade overall, and I'll just reestablish some short trade to look for some more downside potential. And then the losing trade this week was really the Euro Aussie. Fundamentally, I wanted to be a buyer of the Australian dollar. The Australian dollar didn't have the greatest news. I think there was some GDP news that came out, which showed that the economy was a little bit on the sluggish side, but I didn't think it would have been enough to kind of change the RBA's view on whether they would be cutting rates this month. But and also as well with the drama that was been going on with the euro, the economic data, the government, the French government, I assumed that prices would actually move to the downside. So it was a good trade fundamentally, but the market obviously disagreed, didn't think that this was a bargain for the Australian dollar against the euro, and prices just kept going higher. And that's fine, right? We can lose trades. The market doesn't agree, because ultimately, it doesn't matter what I do and what I think. If the market doesn't, think that this is a bargain for the Australian dollar and this is expensive for the euro, then there's nothing that anyone can do. But the fundamentals haven't changed. So ultimately, now I'm looking for a trade around here. And in fact, that presents a lot more downside potential if we do get, negative sentiment for the euro. So hopefully I can make back what I lost and more. So for me, that's what I'm looking for this week. Euro Aussie sells. If there are if there is obviously an entry around here, so that's what I'll be looking to do, and I'll be looking to hold as well. So yeah, let's see what happens there. So those are really, the trades. I did get into a few more, but like I said, in the interest of time, I'll do one winner and one loser. So hope you all have a great week. I will get back to anyone who sent me an email. I'll do either an email response or a video response, because I know some traders have asked for quite complex things, and I would say that I haven't got all the time in the world to kind of mentor. If you're not in the Discord group, then obviously my time will be limited. But I will get back to a couple of you who have asked some questions, which actually probably require a bit more of a video. So just be a bit patient with me. Again, my apologies, but I will get back to you all. Take care and have a great trading week.